All right, let's get some flow picture sort of in. We have Cameron Brandt, Director of Research at EPFR Global, who's joining us now. Cameron, good to have you with us here, back in the program after a while, I think. Prashant this side. So what's the latest in that sense? We're getting continuous sell flows out of India, some $22 billion since the highs in late September, that is September of 2024. Maybe the numbers of becoming on a daily basis, we get those numbers. The numbers are stabilizing at a lower level now. So just wanted to get that context from you, Cameron.
Right. So the answer is that with the really epic levels of policy uncertainty emanating out of the U.S., people are being very defensive, certainly over the last several weeks. Really, the focus has been on fixed income. Gold funds are finally seeing some significant money. And there's been sort of a re-rating of the U.S. interest rate picture. So we are starting to see more significant flows into inflation-protected bond funds. And financial sector funds are doing pretty well because of the assumption that interest rates will stay higher for longer. Tech funds have taken a bit of a beating recently. And in the emerging markets universe, really nobody's doing particularly well. Chinese funds are sort of seeing a steady drip of outflows. The attitude there seems to be, when you do something for me, I'll return. India, redemptions have stabilized, but have not sort of picked up. I continue to expect them to, because in this environment, India has a number of high cards, which we're starting to get some attention. That is the relatively limited exposure to global trade, and the fact that India does crop up in supply chain relocation conversations. But the higher oil prices have sort of counterbalanced that a little bit over the past couple of weeks.
Okay. But the silver lining, Cameron, is I just heard you say that India redemptions have stabilized. We'll take that. That'll be music, really. If you could just expand on that point, overall emerging market funds, are they seeing a lot of outflows, or is it just lack of inflows? And specifically, what's happening with China funds? I mean, the market's just gotten red hot all over again, at least the Hong Kong market, that is.
Right. So generally, the only emerging markets segment that has been doing well in recent weeks is the previously much beaten up EMEA space, emerging Europe, the Middle East, and Africa. That, I think, is tied to a number of things. One is that oil prices have shown some signs of going higher. South Africa's gold story. And again, the on and off hopes that there will finally be some kind of settlement in the Ukraine. Global emerging markets funds have seen pretty consistent outflows, but at a low level. I think certainly people haven't completely switched off on emerging markets, but there's so many uncertainties about trade and U.S. policy in general that people just aren't willing to add to existing positions, and indeed are sort of cautiously trimming it. In the case of China, I think what we're seeing, honestly, is a bit of profit taking. Quite a bit of money went into China equity funds last year in anticipation of a rebound that took a long time to materialize. Now, as you say, Chinese markets are showing some real life. And I think some people who had been along for the ride are taking a chance to sort of get to the off-ramp at a decent price.
Okay, all right. Hi, Cameron. Good to see you. And Cameron, do you have a number to put to it with regard to the redemptions we're seeing from the Indian markets? What was it, say, a couple of months ago? What has it come down to? And, if you could give us a rough number.
So it peaked, there were a couple of weeks back there where, we were seeing 400 or 500 million move out. It's now sort of going down to the sort of 200 to 300 level per week. The trend is sort of cautiously downward, but obviously, 200 million going out each week of the funds we track isn't exactly an overwhelmingly positive sign. But as I said, I wouldn't, I continue not to read too much into it. There really isn't any emerging market at the moment that you can consider red hot or loved. And until some degree of settling down of U.S. trade and economic policy, I think is going to be fairly hard for people to feel comfortable stepping back into the emerging market space.
You're talking about, Cameron, those epic level of headlines or uncertainty? I guess both, right? Headlines causing uncertainty. I just want to quickly, for our viewers, put this up. So U.S. President Donald Trump, during a joint television interview, and this interview was to Sean Hannity of Fox News. It was a joint interview with Elon Musk. So both of them sat down with Sean Hannity, and he said that he had made it clear to Prime Minister Narendra Modi during Mr. Modi's visit to the U.S. That India will not be spared from the reciprocal tariffs. Trump in this interview also said that it'd be unfair to expect Tesla and Musk to build a factory in India to avoid tariffs. He said, well, his exact kind of quotes were, if he wants to build it, he can build it, but it's very unfair, very, very unfair to us. And Trump said that he told Prime Minister Modi that US will charge whatever India charges. And of course, there was the usual sort of bit about the high duties on cars that India sort of, imposes. And they kind of sort of went back and forth about whether it is 70% or 100%. And but, essentially just kind of once again putting the spotlight specifically on the fact that Donald Trump has now repeatedly on various occasions over the past fortnight or so mentioned India and, of course, tariffs here in India as well. So I think that at the margin perhaps causing a little bit of anxiety as well. Cameron, your quick thoughts, on this one. I guess... it's headline watching, but it is tiring, right? Every day you got something. Most of the time it's a repetition of the old thing, but doesn't go away.
Right. Well, my take on it is certainly that Donald Trump has learned from his first term. It has really, worked out that for a U.S. president, your first 6 months are generally, unless there's an external crisis, when you get things done, and is doing everything he can to, set out his stall before the opposition coalesces, before the midterms appear on the horizon. But he's very transactional, and if his sort of stated positions regarding China are the ones he really holds, I think he will be looking to India as a potential ally over the longer term. So it's certainly very destabilizing. Keep people on edge, but you do need to be careful here. Certainly, his first term suggested that everything was up for discussion, and that his negotiating positions are often established by saying,
take the extreme position and then kind of no, got that. Cameron, great speaking with you. Thank you very much. Interesting chat as always, and good to have that perspective from you.